Americans' confidence continues to get battered by the economy as the cost of living climbed more than forecast. In January, when the year-over-year core CPI was at 0.8%, Michelle Girard forecast it would hit 2% by the end of this year. The RBS senior chief economist joins us now from her office in Stamford, Connecticut. She's ranked one of Bloomberg's most accurate forecasters on CPI, making her a Bloomberg best economist. Michelle, welcome back to Bottom Line. Always a pleasure to have you on.
Thanks for having me.
Michelle, we're already at that 2% year-over-year core rate, just where you said it would be at the beginning of the year. The Fed's preferred range is between 1.7 and 2%. What metrics did you see at the beginning of the year that helped you hit the bullseye? I know you prefer to follow company earnings reports and commentary.
Well, you know, I have to say it was a number of different things coming together. I mean, as a rule, we just never believed that the Fed's view of the world, this output gap model where just a lot of slack in the labor market means that inflation can't go up. We always thought that was somewhat questionable. We felt as the economy gained momentum, and it had a lot of momentum coming into this year, that we'd see price pressures build. And the CPI in particular, you know, so much of the core rate of inflation in the CPI is tied to housing costs, which are actually, in the case of the CPI, tied to the rental market. And because no one wants to buy a home and everyone wants to rent instead, you know, it was easy to see rental costs were going to go up. So, I mean, there were a lot of things that came together that had us believing that inflation was not going to be as benign as the Fed thought.
Michelle, with history being a guide, you also watch equity markets and the yield curve. Today, Wall Street is showing strength, and yields on the benchmark 10-year treasuries, they rose the most in 3 weeks. Is this all about events in Europe, or is something else at play?
Well, I think certainly it's a little bit of an unwind. There's been so much flight to quality. Obviously, the Treasury market benefiting from the uncertainty associated with Europe. Any weakness in the equity market is accompanied usually by downward pressure on yields. And the opposite has happened. Today, we've had some news that has, at the moment, made people feel a little less uncomfortable about the outlook for Europe. I mean, it's at least we may have gotten a stay of execution in some people's minds. And so you've seen equity prices do better, and alongside that, you've seen the Treasury market come under pressure and yields edging higher.
Michelle, reports out today, as I mentioned, showed consumer prices climbed in August. Jobless claims, they jumped last week. And manufacturing in the New York and Philly regions, they shrank last month. Let's dissect this information. What's it telling us about consumer sentiment?
Well, there's a couple of different things. Actually, one of the other reports today that was out that I thought was very important, too, was industrial production, which actually was better than we thought. And output in the manufacturing sector, even away from autos, which we know are rebuilding after the earthquake, was strong. We had the best performance this month in August that we'd had since March in terms of manufacturing output ex autos. I think that's really important because, as you say, confidence is down, absolutely. The sentiment gauges, whether we're talking about businesses or consumers, are off. But real activity in terms of what's actually being bought and produced is actually holding up through the summer much better than you would have thought.
What were the upside surprises last month?
Well, in terms of the data, I think in general we saw claims holding steady. Now, we've seen an uptick in claims the last couple of weeks, which I'm absolutely watching. But I think it was the fact that measures of activity in general, as I said, the claims figures, the ISM manufacturing and non-manufacturing indexes, the industrial production numbers, even, quite honestly, the spending numbers, all were pretty steady in August versus July, even versus June. So in this environment, I even find that encouraging. We are not seeing a retrenchment, even though confidence is taking a big hit.
RBS Senior Chief Economist Michelle Girard joining us from Stamford, Connecticut. Michelle, it's always a pleasure. Thanks so much.
Thank you.